Welcome to February's market update. So whether you're a buyer, investor or a seller, or you're just interested about what's happening in the market, I've got loads of information to share with you. So let's go inside, put the kettle on, and I'll share everything that I know.
Supply and homes for sale. Let's start with supply. Wakefield entered January 2026 with a huge surge in new listings. 489 properties came to market. That's a 61% increase compared to December. Even more importantly, that's 11% higher than January last year, showing this isn't just a seasonal bounce, it's real seller confidence. Total properties for sale now stands at 2,414 properties, up 9% from December and almost identical to this time last year. That's a really healthy position to be in. And what this means is simple. Buyers have strong choice across the district, but we're not seeing oversupply that would force prices down. It's fair and balanced. Now let's talk about pricing. The average asking price for new listings in January was just over £271,000, almost exactly the same as last January, and that stability is important. It also represents a 9.5% drop from December's inflated £299,500, which tells us sellers and agents have adjusted pricing expectations to match the market reality. Looking deeper, new listings are coming to market at £301 per square foot, up an impressive 18% year on year, and that suggests that better quality homes and stronger value per square foot entering the market. When we look at what buyers are actually agreeing to pay, the average sales agreed price sits at around £233,500, broadly level with last year and down 6% from December. Sales agreed price per square foot stands at £237, only slightly higher than last year. So again, we see negotiation happening, but not dramatic discounting. Buyers understand the value Wakefield offers, especially compared to neighbouring cities. Sales activity. Sales activity has been extremely strong. January recorded 363 sales agreed, up an impressive 82% from December's 200 transactions. That's a massive month-on-month jump. It does sit 13% below last January's 416, but context matters. December was unusually quiet, and January shows buyers have returned with purpose. The volume alone tells us this market is active and functioning. Market mechanics. Let's take a look behind the scenes. There were 144 withdrawals in January, which is down 15% from December and 19% lower than last year. That's a really positive sign. Fewer sellers are pulling their homes off the market, which suggests better pricing accuracy and more realistic expectations from day one. Fall-throughs reached 76 transactions. That's up 46% from December, but that's largely due to increased activity. And importantly, it's 17% lower than last January. So while more deals naturally create more complications, the overall health of transactions looks solid. There were 399 price changes in January, up from 185 in December, but that reflects some autumn pricing being corrected to meet January conditions. Not panic, just adjustment. Overall, this is a disciplined, balanced market. So what's driving this right now? Well, several factors are driving Wakefield's performance. The first is value. With average sales agreed prices around £233,500, buyers are getting significantly more space than they would for the same money in Leeds or many parts of Bradford. Second is connectivity. Strong rail links to Leeds, Manchester and London, plus access to the M1 and M62 make commuting realistic without paying city premiums. Third is confidence, returning after the uncertainty at the end of 2025. January's 61% surge in listings shows sellers believe the market is ready. This is cautious optimism, not frenzy, and that is healthy. So what does this mean for buyers and sellers? Well, for buyers, this is a market full of opportunity. The 61% surge in new listings means fresh stock is appearing regularly. There's competition. 363 sales agreed proves that. But it's measured, not chaotic. Pricing is stable, negotiation is possible, And with asking prices broadly unchanged year on year, affordability hasn't spiralled. For sellers, buyer activity levels are encouraging. However, pricing remains critical. December's higher asking prices didn't convert into sales, and January's more realistic price is what's working. The drop in withdrawals tells us something important. Homes priced correctly from day one are far more likely to sell without frustration. Professional marketing, honest valuations, and strong presentation matter now more than ever. So here are my closing thoughts. Wakefield has started 2026 with momentum. New listings are up by 61%. Sales agreed up 82% month on month. Stock levels are stable at 2,414 homes. And pricing's been steady year on year. This isn't a boom market and it isn't a struggling one either. It's balanced. Transactions are happening at prices both sides find acceptable. Buyers have choice without being overwhelmed, and sellers have genuine demand, but must stay realistic. January's performance sets Wakefield up well for the spring market ahead. For anyone considering a move in 2026, this is a functioning, sustainable market built on value, accessibility, and strong local appeal. And that's exactly the kind of market where confident decisions can be made.
That was your February property roundup. I'm Rachel from Red Roots, and if you are thinking of buying or selling or investing, or you just want some advice about the local property market or tips on presenting your house, then let me know. Details are below.